Hey traders, Raghee here, and in this recap video, I'm going to jump into copper. Now, a lot of recap videos I talk about, trade management and managing winners, and I want to dive into a trade that hasn't done what I want it to do yet. In fact, so far it actually hasn't done what I wanted it to do at all. And what happens when you've got a trade that's clinging on to a validity of a direction, in this case the buy, the long position, but it's transitioned in the trend. Now, we've seen these transitions before. So, when you see this initial move to the upside, we can see here the movement we had here, transition in here, then we're moving up, and then we've transitioned again, right? So it's not like we had this huge trend and then we've transitioned. This is a little bit more looking like distribution at the moment. Now, even though it was a swing buy and it was valid, we've taken this twice. So there's two swing buys. The one I took before this week, and then the one I took this week. And so right now I'm dealing with still a buy, but now this market has transitioned. Now what that means is what was once a swing buy that we actually opened and took to a profit target, and then now we're sitting at the second opportunity. The second opportunity is transitioned into what we would call an oversold buy. Now this is not a process by which I want you to avoid taking a loss or you just add to a losing position. That's not it at all. Each one of these two entries are valid standalone strategies. The strategy is being dictated by the market trend. And right now, the market trend is really no longer trending. We've lost propulsion. We've lost a nice steady stream of green grab candles. We have blue grab candles. The wave is pointing sideways. And what I really got is the support of a recent low and a Darvis. So that means that what I'm going to rely on is a floor and also an oversold level. So the way I confirm the oversold level is I use one of two tools. The one that I've been using the longest is the slow stochastic. You can throw that in there. The one that I use now, and this is David's creation. I love this thing. It's a fantastic oscillator. That's the Ready Aim Fire. Now the Ready Aim Fire actually does things that the slow stochastic doesn't. It gives you insight into what we call mid-range alerts, right? Stochastic is just going to give me overbought and oversold. That's all it's supposed to do, right? I'm not going to expect the market to do this tool to do anything other than the market than what it was designed to do. The Ready Aim Fire can give me nuances the stochastic doesn't, but either way, whichever one you have, utilize that to identify whether or not this market is becoming oversold, and it is, right? So I have this reading that's really close to 20 and just below 20. So this is not completely oversold, but it's in the vicinity. And so now I go over here and ask myself, like, are we in the vicinity now for an oversold buy? Now, this is not a great oversold buy because this is not a range extreme. Let me talk about that a moment. All right, so there's a couple ways that I can look at this and make a few decisions. One of my favorite ways is a really basic, what I call mid-range exhaustion. It's a 50% of a recent major move. So we're at the 50% right now. You see that right there? On top of that, I've got a Darvis here. I've got the low that we seem to be clinging to. And then what I can also do is go to a shorter term time frame, like a 5-minute or even a 50-minute time frame, and say, okay, could we get a wave reversal buy intraday that shows that there's some bullish momentum making its way into the market? And this is exactly what we'll take a look at for next week. So I'm okay where we sit right now. The market seems to have settled in this area. We've caught a bid. We're not getting much by way of bullish momentum, but we have caught a bid. And this is what you do when markets aren't necessarily following through the way you want. So, I didn't want to highlight a winner. I think this is a great lesson for traders who are dealing with transitional markets. And one of the worst things they do is they assume a broken uptrend is a downtrend, and they aggressively start to short. And what I'll say is, if you do want to short a market that's lost trending validity, go to the short-term time frame. If you're looking for a market to catch a floor after it's lost uptrending validity, go to a short-term time frame. Be nimble and see what that 5-minute is doing, 5 or 15, and it will give you opportunities that really may not be as clear on the daily. So a little bit nuanced here, a little bit more advanced recap, but I sure hope it helps. And I think you'll notice this is going to translate to a lot of other asset classes. See you in the next update.